Hello and welcome to Business 360. I'm Shireen Bhan. The headlines we're tracking for you this evening. Stock markets rise with the Nifty reclaiming 18,000, hitting the highest level in almost a month. The Sensex gains nearly 250 points. The rupee remains on a tight leash against the dollar. Adani Group stocks end mixed in trade. 6 group stocks gain, but 4 stocks hit the lower circuit. Adani Group has now lost 10.6 lakh crore rupees in market capitalization since the Hindenburg report was made public. India's trade deficit falls sharply to below $18 billion in January. Imports at $50 billion, the lowest in 16 months. Exports are also down 6% on an annual basis. Government sources say the centre's aim of an RBI dividend of close to 30,000 crore rupees next fiscal is a conservative one. Sources say the government will stick to its FY23 deficit aim even if disinvestment receipts fall short of the revised estimates of 50,000 crores. Vodafone Idea's losses widened to nearly 8,000 crore rupees in Q3. The average revenue per user improves but remains well below competition. JP Morgan expects the stock to fall 60% from the current levels. It's the largest order in aviation history. Air India will buy 470 aircraft from Boeing and Airbus in deals worth $70 billion. With 31 new aircraft set to arrive end of the year, Air India could soon match rival Indigo's fleet strength. The income tax probe at BBC's Delhi and Mumbai offices over alleged transfer pricing violations continue for day 2. The UK government sources say they are monitoring the situation. The US says that it values press freedom, but not in a position to offer any judgment on the tax action in India. A 42-year-old woman was pulled out alive from the rubble more than 220 hours after a series of earthquakes devastated Turkey and Syria. The death toll crosses 41,000. UN says more than 7 million children have been affected in the region. Elon Musk is aiming to appoint his successor as Twitter CEO by the end of the year. Says he needs to stabilize the company first and ensure that it is financially healthy. Well, let's head straight to the market action. Another good day for the bulls today. The market saw broad-based gains coming in with the Nifty closing at a one-month high. The Nifty rose 86 points, reclaiming 18,000. The Sensex gaining 243 points, ending close to 0.5% higher. Reliance was one of the biggest contributors to the Nifty. Mid-caps outperformed while banks mildly underperformed. Prashant is standing by to wrap up all the action for us. Prashant, green across the screen today.
Well, a strong close and a strong follow-through to the break that we saw yesterday, the break high that we saw yesterday on the Nifty. We took out some important levels as well, which I'll get to in just a bit. Banks underperformed, but they also started to come back towards the last 45 minutes or so of trade. Where were their gains? I mean, the bulk of the gains, if you want to look top-down, were in IT services, autos and real estate, which actually performed quite well. Bank Nifty on your screen, as I said, picked up towards the close, but not all the way. Nifty gains coming through in names like Tech Mahindra, Apollo Hospitals, of course. I mean, we had the management with us and the stock spiked after that, was one of the top gainers on the Nifty. Aisha did well. Reliance, I mean, RIL is starting to move for the last 2 days, and that contributed almost 50% to the gains that you saw on the Nifty. It's an index heavyweight. Bajaj Finserv, SBI Life, HDFC Life were some of the others which did well. There were cuts as well in the broader market. Market breadth has been negative for the last many days, and today was no different. Bharat Forge, CG Power, MCX, RHIM, Campus Footwear, Adani Green, Adani Power, E-Clerks, Uflex, TCNS Brands, and there were many others as well. This is the high volume losers list that I'm talking about. Gains coming through in, Borosil Renewables, another one of those companies which was with us on the program earlier on results. The stock ending up sharply. You had Aisha, Torrent Power, Tejas Networks, GIC, RE and New India Assurance, the general insurance, government general insurance players perked up a little bit as well. 2 days running now, the market has done well. We've broken above a rising channel, a small rising channel, which met the Nifty at about 17,960, and we end the day above, those levels very comfortably in a solid way. It's, of course, over to global markets, which are still undecided. We get retail sales, monthly retail sales, which I think are the next big data point out of the US after CPI, which left markets neither here nor there. And, of course, we'll see if there is more wind in the sails for the market to add a couple of hundred points from here. Back to you.
Yes, we will have to wait to see. Prashant, many thanks for joining us. Crude oil prices, meanwhile, continue to remain on a tight leash. Brent crude is hovering around the $85 mark. Oil prices slightly under pressure today after a larger than expected surge in U.S. inventories. Inflation in the U.S. remains stubborn. Investors fear that further rate hikes by the Fed could hurt oil prices further. Let's take stock of the latest developments with the Adani Group stocks. 6 of the 10 group companies ending in the green today. 4 stocks that ended in the red did hit the lower circuit. The group's market cap was eroded by 13,000 crore rupees today, taking the total loss since the Hindenburg report was released to 10.6 lakh crore rupees. In fact, Adani Green's market cap has slipped to less than 1 lakh crore rupees from its peak of 4.6 lakh crore rupees. That was last year. Now, despite the sharp fall seen in the Adani Group stocks, DSP Mutual Fund has raised its stake in 6 of them. The asset management firm has raised its stake in ACC, Ambuja Cements, Adani Ports, Adani Transmission, Adani Green Energy and Adani Total. Meanwhile, a fresh plea has been filed in the Supreme Court, which has sought a probe into the red flags raised by Hindenburg on the Adani Group companies. The Apex Court has agreed to hear the plea. It has listed it for hearing with the earlier petitions filed against the Adani Group and in the Hindenburg matter. Now, India's trade deficit fell sharply to below $18 billion for the month of January. The fall is largely thanks to imports, which are now at their lowest level in 16 months. Lata joins us now to decode the numbers for us. Lata.
Well, that's important that the trade deficit has come in even below 18 billion, $17.7 billion, and that is a good 25% less than what it was just the previous month, December, when we clocked about 23.7 billion in terms of trade deficit. Now, like you said, the deficit is not because our exports have done very well. In fact, exports are lower than what they were in December, lower than even what they were a year ago. Exports have come in at 32.9 billion last month. That is December, they were 34.5 billion, and a year ago they were 35 billion. So it's not a good export story. It's actually the fall in imports. And India imported much less, a good 16% less than they imported even in December. January imports is 50 billion. December was 58 billion. In fact, on that matter, let's analyze the deficit a little more. The trade deficit, like we said, in January was 17.7 billion. This compares to 25.5 billion, which is the average deficit of the last 9 months. April to December, our deficit was clocking 25.5 billion on an average. And again, imports, like I told you, at 50 billion. If you looked at the April-December tally, the monthly average works out to 60.6 billion. So this is a good 10 billion less than the average we clocked in the previous 9 months. The details are not yet put up on the Commerce Ministry website. As soon as that is out, we will know which exactly are the imports whose reduction helped reduce the trade deficit.
Well, thanks very much, Lata. And speaking of the trade data, government sources telling CNBC-TV18 that the trade surplus for services is at its highest level, with exports in the sector growing at 30%. Sources also say that all ministries have been told to identify imports of non-essential goods and present the data accordingly. Another exclusive tonight. Government sources tell us that the centre has pegged RBI's dividend at a conservative 30,000 crore rupees for the next fiscal. The source added that the government is confident of meeting the FY23 fiscal deficit target, even if disinvestment receipts fall short of the revised estimates of 50,000 crores. Well, we will head into a break, but when we return, we speak to Eurasia's Ian Bremer to discuss the key risks and implications for the global economy and geopolitics when we return.